Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So, moving average support and resistance, which leads us to the next one, and this is the last one, and that is intraday support and resistance break. This kind of goes along with the question that I think it was James that asked about where do you place your stop and engulfing panel. Intraday charts very often give you very important clues and guidance on what's happening on the dailies. So for instance, these two charts are the exact same stock. I believe I pulled this one on Home Depot over the last week or two. On the 30-minute chart, I've got a real nice roll reversal here. Resistance, support becomes resistance. Now look at this. I got a break right here. After it broke, it held it a couple times. Now this line right here becomes important intraday support. So I could use this as an indication that now, even though it might not have shown up yet in the daily chart, it is showing me on the shorter time horizon that I've got to move higher. See, this line right here, this break occurs right here on the daily chart. Maybe not as apparent a trend reversal on the daily chart, but it certainly appears as a strong break with support on the intra, that is the intraday. So the simple application here is I don't always have to stick with the same time horizon. Sometimes my intraday trading activity will give me a clue to a trend reversal before it shows up on the daily chart. So don't get stuck where you think you always have to look at a 120-day daily chart and figure out what indicators and patterns you're going to use, because sometimes your best pattern and signal is not on the time horizon that you're looking at. It's on a different time horizon. All right, well, man, I think we use the next 15 minutes. And Shawn, what do you say that I drive, you tell me what to look at, and let's start looking at doing some analysis on some of these currency pairs.
Good. So do you have a charting platform up and running?
I do. Let's see if we're going to hit this here real quick. You tell me if and when you begin to see.
It's on its way. So let's pull up. Let's go ahead and pull up the euro. So let's go $EUI.
Okay, this is a 100-day daily on the euro with 50 and 200. Take it away.
Okay, let me go ahead and let me pull down mine since we're looking at the same thing here. Okay, so I want you to go back a little bit in here in time. Go back to about November 1st and take a look at that right there. So, you know, what's interesting about this is that we basically had this downtrend going on, and then we plateaued off a little bit, and we came down again. And then take a look right there at that reversal pattern right there, Rick. Yeah, you keep going down. So note how this one looked. And it's a little bit shrunken there, Rick, on my end, but I think you can still see it. That's going to be a green candle there. Now, as Rick was talking about earlier, imagine what this hammer looked like at one time in the day. Not only had we gapped down, and by the way, when you're looking at something that is driven by a currency, currencies trade around the clock 24 hours, expect that there's going to be morning gaps. This is very different than a stock. But there was your typical gapping here, but notice that the gap was to the downside. And think about what this candle looked like at one point in the day. It was a deep red candle that was well below support. But sometime during the day, the buyers had to take control, and they clawed back up along this tail here, right? We clawed back up again, and we ended the day much closer to the top than closer to the bottom, and we ended the day above the opening price, which gave us the green body of the candle. So is that a reversal? Now, as Rick was talking about, we need to get some confirmation. Now, you're not going to get confirmation in the form of volume here. This is more of an index, so you're not going to get volume confirmation. But remember, this is trading as a proxy to the euro-dollar pair. So it's not like there's supply and demand going on here. So in this case, it comes strictly down to looking at the candles. Next day, we gap up. That in and of itself tells me that reversal continued through the evening. We gapped up. We moved down a little bit, but at the end of the day, again, with the green body of the candle, it tells me that the buyers are still controlling. That in and of itself might have been enough for me to say, you know, I'm going for it. Now, the question came up about where am I going to place my stop order. There's a very convenient stop placement for you, and this is going to be at the bottom of the V, or the bottom of the pivot point. So what I would do, and Rick, if you could do it, if you could put it on the reversal candle, and it'll highlight at the low point there. I'm looking at a low, and tell me if I'm looking at it properly. It's 70.79. 70.79. Yep, I think we're there. Oh, no. 70.02. It took a while. So 70.02 was the low point. So I have two choices here. My choice is I could either place it at the low point, but remember, this was a reversal. So why do I need all of that to be undone and for this downtrend to continue? Why not just take the closing price? Because the closing price on this pivot point is a relatively strong point. So, Rick, if I'm looking at it properly, closing price was 70.4. So if I picked it up on the open on the 2 days later, Rick, right where you have that doji.
Right there.
Okay, there we go. If I picked it up then, and it doesn't matter if I went in and I went ahead and did a bull put spread, a bull call spread, I bought in the money calls, at the money calls, I wouldn't ever suggest buying out the money calls. But if you had bought any of those bullish instruments right there, you would have played out pretty darn well here. Now, there's going to be other trades here in which you would have been head faked out. This trade happened to play through. The thing that I like about a trade like this is that when you get the trade signal, you have a very nice risk-reward ratio. You calculate that by looking at where the resistance point is, where the overhead resistance, and I'd be looking at resistance here, Rick, at about 72.8, almost 73, and I'd be looking at support down there at about 70.4. So if I had taken the time to get the trade, I had a nice risk-reward ratio set up. Now, once I hit my reward point, I trade different than a lot of people I've spoken with. I don't take my profit. I never set a limit saying, this is enough money for me. I wait until the chart speaks to me and tells me, hey, it's time to get out. So that's a little bit of historical analysis just looking at this pair. Let's go to the hard right edge of the chart, and that's exactly what it is that we're looking at right now. You know, anybody can do technical analysis in arrears, right, in hindsight. But now taking a look at this pair right now, it was pretty interesting since we still have another 11 minutes to go. Look, we've got a doji. We have a doji at a low. So there is not, to me, any kind of a strong reversal pattern here. Now, look, we've had lower lowers today, but we've also had a higher high today as well. And so far the market is telling me I absolutely don't know which way to go. This is a trade that is setting up for me, but I don't know which way to trade it yet. I don't know if I need to be a bull. I don't know if I need to be a bear. The real opportunity here is really to be a bear, and the reason why is take a look at where the next level of support. If this thing were to close possibly a real nice downward thrusting red fully engulfing pattern on today's doji, if it does end up being a doji, if it breaks down below the support level, I've got basically a currency pair that could be in a free fall here. In this case, I'd probably want to take an aggressive position like a straight bear, or if I was more of a spread trader, which I am, I might be doing a bear call spread and bringing in some credit and having some theta feed my account. For those of you that are a little bit more advanced in options, that make plenty of sense to you. Now, what if it's not? What if this little doji that we're looking at right now is the start of a reversal? What if we're going to go ahead and pivot and start going to the upside again? Well, what a great opportunity to trade this range. A terrific opportunity, because now if I get in at around 74.70, 74.80, it doesn't look like I'm going to hit any overhead resistance till I'm up there at around 77.60, almost 78 bucks. So I've got a nice 4 points to the upside here, which is pretty nice. And on the downside, look, maybe I've got about 70 cents. That's a huge reward to risk ratio in that case. So the trade is setting up using a reversal pattern is what I'm looking for. Now, what I would have loved to have seen today, Rick, you know, this thing may end up being a hammer. We still have a few more minutes to go. But the hammer in and of itself wouldn't be enough to get me to take the trade. I'd want to have some follow-through confirmation. What about you on that trade?
Yeah, well, that's just the hammer is the companion to the shooting star. You basically take the same story we described as to what created and what was happening with the shooting star at the top of an uptrend, and you reverse that, and that's what's going on at the bottom of a downtrend. And so what we would be looking at is This is what this is doing is it's saying in the midst of a downtrend, which we do have, you notice the big red candles here, so we are in a downtrend. In the middle of a downtrend, we had a stall. The window of opportunity for the buyers opens up, and coincidentally, that's happening at a key intermediate term support level. See, we've got a good support level here. Support, 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 support. So what we have to wait for, though, is a confirmation. This is the window of opportunity, but we don't want to jump ahead of the crowd. We want to let the crowd show us that they're going to start moving up. So, sometimes people say, well, hey, if you wait for a green candle, it means you're not buying the low. Well, you're right. You're not buying the low.
Fine with that. Yeah, I'm happy with that.
Because the only way you know that you never know what the low is until after the low's done. So if you buy this right now because you say, well, I want to buy the low, well, tomorrow may have a new low, and you're going to be sitting there wishing you hadn't been a buyer. On the flip side, if the buyers come in, they push the price higher, then you didn't buy the low, but you did buy in the direction of the new trend, and that's more important.
So I'm basically looking at this point in time here, I'm looking at some directional trades. Let's kick it up a notch here, and Rick, let me try to see if I can throw an iron condor out there for the next 4 minutes. So if you could pull up $YUK, let's go ahead and take a look at the yen-dollar pair here. And so we've been talking about reversal patterns. Well, in an absence of reversal patterns, there's trading opportunity. And the trading opportunity here is, look, I can't say which way this thing is going, but to me, it appears that it's stuck. It's stuck in a range. We have a pretty well-defined recent high here, so we've got some resistance up here at around 83.70, and we have some support at 81. So we've got an R1, that's a resistance level 1, and we've got a support 1, but there's also an R2 in here as well around 84.6. That's even more of a resistance point, and we have another support point down here at about $80. So I'm not seeing any reversals going on. I'm not seeing any incredible amount of volatility here. So where's the trade? And I'm not going to force a trade, but I go to my arsenal of trade strategy and I go, look, I've got a strategy that works in a defined channel market, and it works very well with a European-style cash-only type of an instrument like this option is, like the ISE FX Options. So what if I were to, and let me go ahead and look at my notes here. I was kind of mocking this trade out earlier. What if I were to do a credit spread at the 84.85 level? You see, I don't think it's going to get there. I don't think it's going to get up to 84 and 85 by March. See, the March option has about 59 trading days left. I don't think it's going to get there. I don't think it's going to get that high, but I don't think it's going to get this low, and I'll tell you what I mean by this. I don't think it's going to go down to 80.5 and 79.5. So I can do two credit spreads. I can do a credit spread to the upside, and I can do a credit spread to the downside. Now, with a credit spread, I'm getting paid up front, and as long as it doesn't touch either of those points because it's stuck in a channel, I'm going to get paid. Now, looking at the trade, now granted, there are 4 legs in this, so this is definitely going to be beyond your intermediate. This is more of an advanced trade. There's 4 legs in this trade because there's 2 spreads on each side. But one side to the upside has a 50-cent risk. To the downside has a $1 risk. But the total net credit, bringing all these trades together, is going to bring in about 45 cents. Now, granted, I've got to split some bid-ask spreads here. But if I can bring in 45 cents, this means that if I am wrong to the upside, I'm risking a nickel. That's all I'm risking. And to the downside, I'm risking 55 cents. So I'm risking more to the downside. But look, if you look at the 2-year chart, Rick, would you mind backing that guy out to about a year or 2 years?
Yep.
And I don't know if I'm going to be able to speak fully to an iron condor in 4 minutes, but I'm doing my best.
That's 1 year. Is that enough?
Yeah. So take a look. I think that we're not going to get down to some of these historical lows again. I think the Bank of Japan, the Bank of Tokyo, would intervene before that would happen, or at least they would start talking intervention, which sometimes can support the pair from making that move any further. So all I really need is 59 days of it going nowhere. Don't reverse, just go sideways. If it goes sideways, then I walk away with my 45-cent credit. If it moves to the upside and goes through these 2 levels of resistance, I'm out a nickel. So there's very little risk to the upside. What I really don't want to have happen is I don't want to have it fail and come down hard and go down to some historical lows, because then I got 55 cents. So this is the kind of range-bound trading that I like to do, because it's easier for me to go ahead and say, I don't think it's going to break through these ranges. And if it does, I get enough early warning that I can close out the trade, and I can close one leg or both, I can close one spread or both spreads and still walk away, sometimes profitable, because it's going to be a theta positive trade. So that's a pretty advanced trade that is non-directional. And because I'm not seeing any reversal patterns, I'm seeing a really complacent price of this pair right now. Keep it at complacency, and I can walk away with a pretty nice amount of money here. So let me take a look. If I'm talking about $45 on a contract divided by 55 risk, I'm talking about an 81.8% return on risk in 60 days. That's a pretty nice return on risk. Not return on investment, return on risk, because I've got to factor in the worst case scenario. Worst case scenario is it breaks down below that support level, and I lose on that side but make up on the upper side. Rick, I hope that, I know it's being recorded, so if you go back and you walk through kind of the analysis and the numbers I threw out and take a look at it in your option chain, you'll see how I put that iron condor together. Okay. Did we have any questions? We probably need to move to wrap up here pretty quick.
Yeah, let me take a look. Let me go back to the presentation, take a look at the Q&A. We are coming down to the last couple minutes, so let's pull a couple questions out. I don't see any questions, so let me do this. Let me go ahead and just give you just a quick 1 minute, and then Steve, and that'll leave you a minute or two to make announcements and closing comments. But just want to let you know that, as I said earlier, we do have our website, which is promarketadvisors.com. We have a full event calendar on there. As we mentioned at the beginning of the call, we have a couple of events coming up here over the next couple months where we're actually going to be co-presenting with Steve and the International Securities Exchange in a couple of different venues, but we also have some other things that we do, both online and live, so we'd certainly appreciate anyone that comes up and introduces themselves. We always like to meet the folks that join us on these calls, and also just take a peek around. If there's anything else that you see that we offer from a resource standpoint, certainly encourage you to take a look at that. But the best way to do it is to bookmark our site, and that's the best way you can keep up with us. We're about a minute before the top of the hour. Let me go ahead at this point and hand it over to Steve, and just in case we don't get a moment at the end for Shawn and myself, we want to thank you very much for joining us today, and for thank the ICE for giving us this opportunity to share with you today. So Steve, thank you, and we'll stay on while you make a couple closing comments there.
Rick, Shawn, thank you so much. As they said, you can follow them on Twitter. Please go to promarketadvisors.com, bookmark their site. They will be at many of the OIC events in 2011. I'll be with them for many of the events, so go to the OIC site and check out where Pro Market Advisors will be. I think they're going to be in Costa Mesa in about a month or so. I guess it's about 7 or 8 weeks. And then in New Brunswick, New Jersey, and they will be at other sites later in the year. Rick, Shawn, thanks so much for delivering such quality educational material. Really appreciate it. And I look forward to you coming back to delivering an ETF presentation in the next month or so. You guys are up for that?
Yeah, absolutely.
Thanks again. Really appreciate it.
Thank you, Steve.
Thank you, Steve. Thanks,
everyone. Take care, guys. Thank you again. So you see the symbols there. If you're interested in trading the EUI, that's dollar-euro, or if you wanted to look at the reverse, you could do it euro-dollar with EUU. If you're looking at the yen, that's YUK. And all the symbols are right there. You can go to fxoptions.com to reference any of the symbols that you might need. Next week, we have a special presentation, and that will be FX Options questions and answers. So I'm not going to deliver any material. I'm just going to come ready to answer all your questions, and that will be next week. So you can sign up for that, January 24th. Then we'll be back on February 1st, 8th, and 15th. So back on the Tuesday schedule. 1 week where we're just going to do Monday. That will be next week. Where we have the following week: John Person, Jason Ayers, and Nicole Wax. So those 3 Tuesdays at 3 o'clock, but next week's special will be on Monday. So please check us out then, and I will be delivering just Q&A. And so that might be something where you can bring all your questions, and I will hope to answer all your questions. And here is the schedule for not only the currency options, but also for ETF, our new program. In fact, we're going to start a new program in just 30 minutes, Intro to ETF and ISE Indexes, January 18th. That's today, 4:30. Then we go January 26th with basic ETF options terminology, and we'll run into many of the, I guess they would be ones that we've had many questions for. So very popular topics will be presented over the next couple of months. So FX options will continue, and we're also going to deliver ETF options to all of you. On the behalf of the International Securities Exchange, so Steve Meisinger again with Rick Swope and Shawn Howell, we want to thank you for listening to the presentation, for participating, and please come back real soon. In fact, you can even come back at 4:30 for an ETF presentation. Thanks so much. On behalf of the ISE and Pro Market Advisors, have a great trading day. Bye now.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX Options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.